Hello traders, good day to you all. This is Christopher Glen. Today is Monday, 2013, the 28th of July, and we had a pretty quiet day until the announcement regarding the US dollar, the pending home sales. Basically, it's the amount of houses that haven't been completely sold yet, that are pending at the moment, and it's a good indication for the expectation of mortgages, of spending, and potential of a variety of other issues. We can see that we've received bad announcements regarding the dollar, but going over the charts, we'll see that the expression was a bit different on front of a variety of assets. We will talk about that in a second. But before that, I'd like to go over the entire weekly calendar. We can see that tomorrow, um, Tuesday, we will have only the CB Consumer Confidence announcement, very important indication regarding the reaction of consumers. Uh, Basically, it shows very accurately what's the potential in the market at the moment. We can see that we have slow uptrend movement on the consumer's confidence, but there's a great potential to see downtrend, lower amount of confidence on behalf of the consumers, and therefore I do expect to see bad indication over here, uh, something like 84, 83. A logical expression of the economy because we've got some slow down on several fields, especially what we had today. It's an indication not for consumers' confidence, but for general aspects of the market. And at the moment, I do expect to see weakness on behalf of the dollar over here. I'll talk about the dollar index, or we'll talk about the dollar index in a second. We'll analyze the charts. Wednesday. It's a good day to trade on Wednesday. We've got European announcements regarding the German CPI. All day long. It's not a specific indication, but all day long we should expect to see liquidity on behalf of the euro. After that, we've got an ADP non-farm employment change over here regarding the US market at 1:15 GMT, a bit before the US session. After that, we've got the advanced GDP, and late at night, we've got the FOMC statement. Again, very important day in terms of liquidity. The thing is that this week, Wednesday and Friday will be the important days. Thursday, although we've got the usual unemployment claims in the United States and a GDP report regarding the Canadian dollar, still I see better liquidity potential on Wednesday and on Friday, where we've got again the non-farm payroll, non-farm employment change, and unemployment rate in the United States. No more announcements regarding Canadian market or euro at the same time, but again, the non-farm payroll is more than enough for us to produce enough liquidity. Manufacturing PMI before that at morning time 9:30, and generally I do expect to see very nice Friday in terms of liquidity. Remember that on Switzerland we've got a bank holiday and we've got low liquidity during the European markets time frame. Looking at the charts, let's go together to the dollar index. And I've been talking about the dollar index for the past, who knows how much. I've been talking about the structure itself. I said that we've received an impulse movement and we had a corrective pattern that is a daily chart. Again, we're talking about the past June, July. We had a bit of stronger dollar in the markets. You can see the first impulse uptrend movement, second pullback. And then since here, we've received 5 waves, a 1, a 2, a 3, a 4, and a 5. Let's go to 4-hour chart. We'll see the separation in a nice formation. Again, we've got a first impulse 5 waves uptrend movement, then a corrective pattern ABC dropping down to the 80 level, very important support and resistance line. We broke this trend line, we pulled back toward the support and 80 level, and from this point and beyond we've received a 1, a 2, a 3, a 4, and a 5 climbing up. At the moment, my aspect is that we're approaching the end of this uptrend, and I do expect to see a bit of weakness during this week regarding the dollar. I do expect the dollar to drop down to 80.5. That is my potential. That's the potential of the dollar to drop down toward. Again, we can say that's logical because It won't penetrate the first wave impulse movement. After that, I do expect to see a stronger dollar in the markets, but at the moment, I do expect to see a weaker dollar in the markets regarding this week specifically. Maybe from tomorrow's announcement and the non-farm payroll as well. We can see that today we've received a bit of weakness, a bit of downtrend movement on behalf of the dollar. Do expect to see this downtrend movement continuing, but let's see a different image. Looking at the South African rand, I can say that although the dollar lost some strength in the market, still we can see that it gained some strength in front of the South African rand. Let's look at an hourly chart. We can see very nicely that we've came across a very difficult support and resistance line to cross. A daily chart indicates that we're still forming the corrective pattern ABC after the impulse movement. And again, my assessment regarding this specific chart, the dollar versus South African rand, I've been saying that for a while, is that after we've received this impulse 1, 2, 3, 4, 5 level, this pullback, the A, the B, and the C pullback reached 100% of completion in terms of structure. The A wave is identical in terms of length to the C wave. Therefore, I see a great potential to climb higher over here. As I said, because my expectation is to see a weaker dollar in the market, and this uptrend movement is expressing stronger dollar in the market, and I'm expecting the strength of this chart to climb higher on behalf of weakness regarding the South African rand, and not because of strong strength on behalf of the US dollar. Analyzing the Russian ruble, again, we can say that the Russian ruble is affected by what's going on in Russia at the moment and not on the aspect of the dollar itself. Let's go to a lower chart. Again, we can see that the market climbed higher in 5 waves. We've received an A, B, and C pattern dropping down. That might be an A wave dropping down, might be an ABC completion. We'll have to wait and see. At the moment, it seems like this is the initial impulse movement for a higher rate. We've received the first wave, a second wave, a third wave, a fourth wave, and a fifth is at the making. Again, I can't see the edge for this specific structure. The logical uptrend will be until the 35.7 area. But again, I can't see a specific potential on this chart because of what's going on right now in Russia and because of what's going on right now on behalf of the dollar. It's not logical to see an uptrend over here, although the Russian ruble itself is losing strength in the market. Therefore, again, the same motive as we saw on the South African rand, that might be an expression for both weakness on behalf of the dollar, but also weakness on behalf of the Russian ruble and a continuance of an uptrend. So I can't really have a basic reaction to this structure. That might continue higher, might not. I would leave the this asset specifically alone. I just want to say that I've got the position opened on the dollar versus South African rand. I do expect to see long liquidized uptrend movement over here, and that is a great entry point for this uptrend potential. Looking at the gold, we can see that the gold gained some strength for the gold gained some strength on Friday along the end of last week, and this uptrend movement formed again a 1, a 2, a 3, a 4, and a 5. So we've got an impulse movement completion over here. From this point, we've received the first A wave, a B wave, and a C wave is expected to drop down, not significantly, approximately until 1.3, $1,300 per ounce, and then I'm expecting to see an uptrend movement expressing the strength of the gold, expressing the weakness of the dollar. So a good place to catch an uptrend movement on the gold will be approximately at 1.3, $1,300 per an ounce. Looking at the oil, we've got a pretty large differences over here because of the geopolitical circumstance around the world. You can say that we've got a lot of confusion and fear implanted in the eye or the reaction of traders. This aspect might confuse traders and pull them toward a condition where they'll pull funds out of the market, not investing in the market. That's one aspect. On the other hand, We can analyze this chart along with the edit wave analysis again, but a daily chart looks very confusing. Let's go to a weekly chart. Maybe we'll find a more organized area. So we can see again, that's an amazing chart. See the expression of weakness on behalf of the oil once we had the 2008 crisis over here. And since then, we've just pulled higher, an A, B, C pattern dropping down. And from that point and beyond, we've received a 1, a 2, a 3, a 4, and a fifth wave. Should have been completing an uptrend movement, but it seems like other geopolitical circumstances are affecting this chart significantly. So in terms of structure, the structure is very confusing on my end, basically, but we can definitely say that we're dealing with a triangle over here. And what I'm doing right now, I'm analyzing the oil's condition, just because that analyzing the oil on a weekly chart will assist me to make a decision regarding the current investment for any kind of market, contract, Forex, or so on and so on. So we can say that we received an impulse move dropping down, an impulse movement as part of a corrective pattern climbing higher, and a triangle over here. So a triangle, meaning that we do expect the market to bounce from one end to another. As we can see, we've received an impulse movement dropping down. That's a 1, a 2, a 3, a 4, and a 5. And since then, we've received an A, a B, and might see another C climbing higher toward this area. So the potential at the moment in terms of long-term investment is an uptrend movement on the oil. But doing that, knowing that, let's go to a lower time frame and see if we can find logical structure over here. So again, you can still see the lines of the triangle over here and over here. Impulse movement dropping down. And let's look at strength. We've got an A wave, we've got an A, B, and C wave, and we've got a 1, 2, 3, 4, 5, and it seems like we've completed this structure, and the potential at the moment is again to see an uptrend movement after this corrective pattern. Let's go to a lower time frame and see this specific structure. It looks like an impulse movement and a corrective pattern. So indeed, we've received a 1, 2, 3, 4, 5, and we've received an A, a B, and a C wave dropping down. The bottom line regarding the oil, my expectation is to see the oil climbing higher. At the moment, in terms of price, my goal is approximately 108, 109. Just that the trigger to actually invest in the oil will be crossing this trend line. Approximately above 101.7, 101.8 will be a logical pullback to ignite other traders' aspect to invest to buy more contracts regarding the gold. So an uptrend beyond 101.8, 102 even, that will be a logical entry point toward the 8% of an uptrend, 6% of an uptrend toward 108. I wish you all the best with your trade traders. Have a pleasant day, and bye bye.